Hello, everyone. I'm here with Sydney Powell from Maple Finance. Sydney, thank you for taking the time to join us on what is, I think, a late night for you in Australia.
Yeah, it's about that's all right, Ross. It's about 9 p.m. here. But one of the benefits of being in Australia is you get used to just taking calls at very, very odd hours. I think the
Exactly.
the one the ones in New York or with New York usually begin about sort of 4:35 in the morning, and then the ones with Europe don't finish till sort of 10 or 11.
And I swear you never sleep anyway. We'll come on to that on the launch in the next few minutes. But yeah, just this is really just a catch up. So DeversiFi, we know you guys quite well. Big fans of the project. You're solving a really interesting problem for the space and solving a friction point for DeversiFi as well, which we can touch on later. So the live stream. Anybody who's in the call, please feel free to jot any questions down in the side panel there, and we can get on some of those later. Hey, Sam. And yeah, really just no agenda, just wanted a bit of a catch up. So I guess to kick things off, perhaps you could introduce yourself and talk a bit about Maple and the problem that you're solving, and then we can go from there.
Yeah, no, sounds good. Thanks, Ross. So to take a step back, so my background was in traditional finance. So I used to work in institutional banking, and in my time there, I would help lending companies to issue bonds and raise debt so that they could expand their operations. Now, after doing a number of those transactions, I was always more sort of interested in seeing the builder side of things, and being on kind of, I guess, the entrepreneurial side of things. So I then went and joined a commercial lending fintech with the goal of actually helping them sort of issue their own bonds, raise funding so they could expand operations. And it was kind of going through that process with traditional finance that I sort of encountered the pain points and could really see that it wasn't actually set up in such a way to help builders and entrepreneurs that really want to develop and kind of grow their businesses. And so it was around that time that I started learning more about Ethereum. And I was effectively thinking, hey, we have all these stacks of documents that just, create effectively if-then statements for how bonds and debt work. Presumably we could do this much more efficiently with smart contracts. And then what we could do is build sort of a more global capital market. And so that was what I set out to do with Maple. And so I wrote the original white paper for it back in early 2019. And then we've been working on, sort of a proof of concept since then. And then it was really around September of 2020 that we're actually able to raise funding and go forth and build this full time. So what Maple is that we're a decentralized marketplace for institutional growth capital. So if you actually unpack that, what we believe is that the crypto native economy is going to be many times the size it is now. That the builders of the future, cutting edge financial products and the tech giants of the future are really going to be using crypto rails. And so what we want to do is provide them with a way to access the capital that they need to expand their businesses. So they can't currently access it from traditional finance. And then generally lending is over collateralized when you borrow from the likes of Genesis and BlockFi, unless you have very long-standing relationships with them. What we recognize, though, is that we now have companies in the crypto space who have strong reputations, strong balance sheets, and they're cash flow positive. So we want to enable them to leverage that to borrow under collateralized from the DeFi ecosystem. The way that we actually allow for this to happen with Maple is that we start with the primitive of liquidity pools, which is where we get capital from investors in DeFi. And the institutions can borrow from these liquidity pools. But what's different about Maple is that we have the role of a pool delegate who would assess the borrowers and agree terms with them in exchange for some fees. And in that way, we create a much more efficient capital market where the borrower gets the best of an OTC style relationship where they get confidentially credit assessed and they can get feedback on terms up front. And meanwhile, the lenders who are entering those liquidity pools get a set and forget solution because they don't have to assess the borrowers themselves. They get diversification from day one. And then they also get the benefit of a reserve provided by the Maple token, which I'll go into in a moment. So that's a bit of an overview of how it works. Yeah,
that's a great overview. And maybe we take a pause there. So it's essential sort of core premise is you're decentralizing institutional borrowing. And you're putting all of that stuff from the traditional TradeFi bond markets onto Ethereum. So you're decentralizing institutional borrowing. That doesn't exist at the moment in DeFi because you either have to resort to two options as a lender. So you either have to go to someone like Aave or Compound, which are both fantastic protocols, but you have to over collateralize. But that's great because if you have a large supply of capital and you're happy to borrow against that, that works really well for you. But there's obviously liquidation risk, etc., that goes along with that. And then on the flip side, if you do have a strong balance sheet and a bit of a reputation, you can go to a centralized lender, but that market is quite opaque and not very competitive. And that market is huge. And what you're doing is you're kind of bringing the best elements of both of those onto the blockchain, decentralizing a load of it, which I want to touch on later, how you're doing that. And you're opening this up for any crypto company to come and either borrow or lend, but mainly on the borrower side for institutional. So you're essentially turning something that, you're solving a huge friction point for sort of trade prime lenders or prime borrowers, sorry, as I call them, which I think is fantastic. And DeversiFi, we actually met you guys probably 6 months ago because as a startup, you're actually solving a huge problem that we've run into, which is, we are a decentralized exchange built on layer 2, but we have quite a capital intensive business because we run market making services. And what we need to do is hold collateral in various areas around crypto, whether that be on exchanges, on DeversiFi, locked up in products that, because we need to fund fast withdrawal pools or this sort of thing. So actually we've got quite a capital intensive business and we don't have a huge amount of assets that we can say, oh, hey, actually, we're not using those anywhere at the moment. Let's just, use those to borrow, 200% over collateralization. So what you guys are actually doing is you're giving companies like DeversiFi, who've got reputation and a strong balance sheet and good credit risk, essentially, the ability to borrow at much more favorable terms that works for everyone. And there's the whole fixed rate and everything as well. So absolutely can totally see that the problem that you're solving. I wanted to dig in a little bit more into some of the specifics, if that's okay. You briefly touched on the role of delegates. Could you explain a little bit more about delegates and how they work and what their role in the system is?
Yeah, absolutely. That's a really good question. So if we look at who's likely to be a delegate, so it's generally going to be, say, a fund or an industry professional. What we would look for in a delegate is expertise first and foremost, because one of the core responsibilities of the delegate is that they, after setting up one of the liquidity pools, what they would do is they then credit assess the borrowers and discuss and agree the terms on which the borrower could take out the loan from the liquidity pool. So there's that credit approval element. And in exchange for doing that, the pool delegate earns a percentage of both an establishment fee paid by the borrower and then also a percentage of the interest that's earned by the liquidity pool from those loans. So a few key things to note about the pool delegate. So because it's a very important role, it's obviously essential that their interests be aligned, and so we require them to stake a liquidity pool, and that means putting down Maple token and USDC to provide a kind of reserve which protects the liquidity providers in that pool. So that means that if there are defaults, they get slashed first.
Okay. I was actually aware of that. So your delegate has essentially the highest percentage of reward because the equity.
Yeah.
But also they're the first to get slashed, so the incentives are completely aligned.
Yes. So that incentive structure just ensures that they're not going to write bad credit. And then the other key element is that from the value proposition for a borrower, by having this pool delegate role, who's there, representing a liquidity pool, what we're able to offer them is confidential assessment, so that they don't need to, dox their financials to the whole world. Yeah. They can also get feedback up front on their terms, rather than having some kind of system where they need to wait 5 or 7 days for a distributed community to vote on it. And then from the lender or liquidity provider side, the value that the delegate brings is that they're performing the assessment and they have expertise. So, anyone can come and participate in a liquidity pool. They don't need to be an expert on, credit underwriting themselves to participate on the platform. So those are some of the really key elements. How we think about ensuring the quality of the pool delegates. So they need to be whitelisted. And in considering that process, we would always look to, as I said, expertise. Can they assess the borrowers properly? Do they have a strong reputation so that they can, attract liquidity to their pool? And then do they have strong relationships to bring deal flow and also, do kind of informal checking on potential borrowers? So we think those are kind of three very key elements, and we're very happy with the first pool delegate that we have on the platform, orthogonal trading. We think they definitely tick all three of those criteria, and then we have a couple of exciting second and third pool delegates we're in discussion with, but more announcements on them to come later.
What tease? I was going to actually, that's probably my next question was, so it's very basic level. You have liquidity pools, which are managed by delegates, and these delegates assess potential borrowers who are prime credit institutions, crypto mainly to begin with, and going on from there. And then there's a negotiation, a kind of a bit of a off-chain negotiation that happens before they submit a proposal. And then how does it work? Does the delegate approve it and then it gets funded by the liquidity pool, or is it just anyone who wants to can contribute? How does that work?
Yeah, how it works is that once terms are agreed after an off-chain discussion between the borrower and the pool delegate, then the borrower will create the on-chain request for the loan, and then the pool delegate can approve that, and then it would be funded from their liquidity pool. And you could actually have, what's really interesting is that because we're a marketplace, effectively we see ourselves as providing that capital markets infrastructure. Multiple pool delegates could fund a loan request. So you could have, potentially, SpaceX comes on, let's say, and wants to borrow sort of $2 billion. You could have that funded by five or more different liquidity pools, for example, and pool delegates. So it's creating that diversity of funding, which is another big benefit. What we offer the borrowers on the platform is really certainty. So our product is designed to help with business expansion. So we give fixed interest rate, fixed tenor, fixed dollar collateral amount. And this helps builders who want to expand their companies with capital budgeting, out for the duration of the loan.
That's awesome. And something I think people will be really interested in is, so we flip it around. So we've talked a lot about the borrowers, and I've got some more questions on that later. But in terms of the lenders, so who is this open to, and how do you see the pools developing within the protocol and the system? And what are the potential rewards, and how do people get compensated for providing liquidity?
Yeah, so at the most basic level, people are providing, early on in the protocol, they'll be providing USDC stablecoin. For our first batch, we will have people locking that up for 6 months so that we can go through 2 cycles of loans with borrowers. The people who provide liquidity early on will be earning USDC yield. This would be about 10 or 12% after net of fees from the underlying loans, and then they'll earn MPL rewards, which are going to be sized, depending on kind of the pricing of the token at the time. And how I actually see the kind of the liquidity provider role evolving is that this is a way to earn a kind of sustainable yield through the DeFi ecosystem. So if you look at this compared with other protocols, what the yield is coming from is the cash flows of crypto native businesses that have found product market fit. They're providing valuable services, whether it be liquidity as market makers, or say like a node operator on say Chainlink, for example. They're providing valuable services, so it's a very sustainable yield rather than one that's purely based on kind of token valuations. And then the way I see it evolving is that we have here an opportunity where people can get yield from specific strategies. So a pool could pursue a region, like say North America or Southeast Asia. It could pursue a different industry, like you could have one that's focused on miners, for example, one that's focused on market makers, and then you could have one that's focused on, say, node operators, or cross-chain staking, that kind of thing. So I think there's a really exciting sort of possibility set there for people from DeFi to get involved and start earning a yield here. And what we're looking for, is more that kind of patient capital.
Yeah. No, that makes sense, and that's not something that exists really in any other product. And I think that has a huge draw for a lot of people. People just want certainty. How does this? Just one more question on this. Sorry. So if I'm a liquidity provider staking into one of the pools, does that mean that my funds are locked up even if there are no loans being taken out against that pool, or do I have the ability to come in and out of that pool, or can I trade LP tokens from that pool, for example? How does it work? Is it locked? Is it liquid?
Yeah, early on, it's going to be locked for 6 months. And that's because the pool is smaller and therefore less diversified to begin with, so that we wouldn't have that kind of revolving balance of payments, which could support liquid redemptions. But as it gets larger, like you can imagine a pool that's say 300 million in size, if it kept a balance of say 5 or 10% in cash, it would be somewhat of a drag on returns, but it would also therefore, probably meet the ongoing cycle of redemptions coming in and out. Another exciting way to accommodate that is if we could actually create kind of a secondary AMM for the LP tokens, which would let people say exit and get liquidity, perhaps at a slight discount to kind of par value of those tokens. So those are two possibilities.
That's what I love, the way that's evolving. So initially, will the pools kind of be open to a certain level, and then they'll be closed, and then once they get full, will they be reopened again, for example, to top them up so that more loans can be taken out against that pool, or will there just be new pools?
Yeah, no, that's a really good question. So with our launch, we're taking more of a guarded approach. So we'll do the first tranche of borrowers, and we've got a borrower pipeline of more than 40, 45 million at the moment, and that's capping all of the borrowers at 2 million, so that we maintain diversification. Yeah, so we think we have a product that it has a need in the market, definitely. So
just to make sure that I didn't catch that incorrectly, because you've got a dodgy Aussie accent, so something might be lost in translation. But did you just say you have $45 million in interest, and that's still capping everyone to a significant extent?
Yes, yeah. So that's capping everyone at a maximum loan size of $2 million, and obviously you can appreciate that we have some borrowers who have north of 500 or a billion balance sheet, and so they're obviously going to have much larger appetite. And what we try and stress is that all of these borrowers are very creditworthy. Largely, the funds are being used in market neutral operations, so they're always holding them on hand, capable of repaying them, and they're never taking that kind of directional beta risk on the volatility of crypto assets. But what we're doing with the launch is, so we'll have the first cohort of about 15 million in borrowers, and so that gives us a guarded launch with opportunity to make sure that everything works correctly. And then when we hit that $15 million cap, people won't be able to deposit more liquidity. But then what we'll do is we'll go through the first cycle of repayments, so about 4 weeks, and then we'll open that up again and add another 15 million of liquidity and keep progressively expanding it, so that it's just so that we scale out not too aggressively, but in a more methodical way.
That's awesome. That's absolutely brilliant. Yeah, just to touch on the point you said there, a lot of these companies that are going to be borrowing initially will be market neutral, which is why this makes complete sense, because their whole business model revolves around the fact that they can stay market neutral. We're talking market makers, exchanges. They might take on a little bit of risk here and there, but they're operating within very strict limits, and that's their whole business. And they've survived the bear market and the bull market. So yeah, this is a perfect set of customers to go with initially. And I can imagine some of those have got huge balance sheets. I wanted to talk a little bit about the Maple token, because we've touched on it in various ways, but could you give an overview of the Maple token itself and where it's used in different parts of the system?
Yeah, sure. So the Maple token is a governance token. So it is used in voting with the DAO. The other way that it's used is actually in more of a participatory capacity. So aside from, say, voting on what is done with funds in Treasury, and the Treasury, of course, earns part of the establishment fees paid by borrowers. But the other way that the Maple token is used is, as I touched on before, it can be paired with USDC and then used to provide a reserve to a liquidity pool of your choice. So if I hold the Maple token, I can put it in a balancer pool with USDC. That gives me balancer pool tokens. And then what I can do is choose any of the pools on Maple to stake. And so I could say, well, I really like the strategy pursued by this miner pool and the fees coming through. So I'm going to stake this pool. And what I'm doing is providing that kind of reserve that gives a bit of a credit risk buffer to protect the liquidity providers in that pool. And I earn a percentage of the interest. So I earn about 10% of the interest yield. And what that means is if the average loan is paying, say, 14 or 15%, then I'm earning about 1.5%. Now, that doesn't sound like a lot, but keep in mind that the reserve is only going to be, say, 7 or 8% of the actual balance of the pool. So it's 1.5% divided by 8%. So it actually starts to look more like an 18% yield there in USDC for staking. So, we think this is going to appeal to people who are a little bit less risk averse and want to get those kind of, mezzanine or junior level of yield.
That's amazing. So it's not only a governance token, but right from the get-go, you can deposit USDC and Maple into a balancer pool, which also is going to give significant liquidity to Maple token itself in terms of trading and volume, right? Because that's in the balancer pool anyway. But then you take that BPT token and you can stake it into any pool, whether it be lending against miners or lending against some eventually maybe super risky hedge fund or something, and that provides the credit risk buffer. So it's a governance token. It's a token that gets fees from credit risk, but also if I didn't want to stake my Maple token, does it accrue fees in any other way, or is it just a staking model?
It's primarily a staking model, but of course, if you hold it, then you can participate in governance and vote on what is done with the those establishment fees that get accrued to Treasury. So, however they could be voted on to be used by the by the token holders.
So when you say
could either be distributed for development or otherwise to holders.
Sorry, I'm a bit just to double check. So in terms of the different fees, so you have the initiation fees, which is going to the delegates. Is that right?
Yeah, so it's actually that fee that I'm referring to as the establishment fee. So think of this as like the structuring fee done for kind of the upfront work involved in creating the loan. So think of it as approximately, say, 1%, and then half of that will go to the delegates, so like 50 bips, and then half of that will go to the Treasury, and then that can be voted on, what is done with that by the token holders. And then the second fee is what we call the ongoing fee, and this is about 20% of the interest. So if the interest was 15%, this would be about 3%, and half of that, so 1.5% goes to the pool delegate, and then 1.5% will go to the people staking that pool. So what's really interesting about that is it creates this kind of floating mechanism incentivizing people to stake a pool. So if a pool's deemed to be really low risk, then you demand a lower yield to compensate you for being in that subordinated position. And that would mean that, people would be willing to pile into that reserve. Whereas if something's much more risky, then people would demand a higher yield. And so probably less, perhaps less people would be willing to stake that pool, but it creates an interesting feedback mechanism.
Yeah, definitely. It'd be interesting to see where people land as they assign their own kind of credit risk to these different pools. Because it might be that there's barely anybody staking to begin with. And that means that the first people in are getting a huge amount of the rewards for their staking. Yeah, that's really, really interesting dynamic there.
If you had a pool delegate that was targeting like really high yield debt and borrowers, probably what they could do is set that fee that goes to the stakers to be higher, so that maybe it's actually like kind of 3 or 4% sort of interest yield on the pool, and then that would therefore attract a larger staking reserve, which makes the pool more attractive to liquidity providers. So it's kind of like you have a higher risk pool, but it has a higher level of protection because it's paying more for that protection.
If I'm borrowing from the Maple protocol, could I then go and buy Maple tokens and stake against my own pool because I know that I'm not going to default? It'd be quite interesting.
Yeah, I'm sure some interesting models of kind of financial engineering will emerge, like the same way where you had kind of the recursive use of comp, where it was borrow, lend, borrow, lend recursively. And I can see that seems to be happening again with like Instadap and Aave at the moment as well, actually.
maybe this would be a good chance to touch on decentralization a bit more, because we touched briefly on governance there as well. But could you explain a bit about the roadmap for decentralization? How decentralized is the protocol right now? Where's it going to be over launch, and where's it going to end up? I think that'd be really interesting to hear.
Yeah. So I think one thing that people find interesting is kind of the idea that we still view the protocol as very sort of decentralized, or that it will in a mature state be decentralized, despite having these kind of the pool delegates in this sort of trusted position. And the reason I say that is that because in a mature state, you could actually imagine that you should have, let's say like 40 or 50 different pool delegates. So I would say when you have that, it's almost like, I don't know, Chainlink or some other protocol that has node operators. Like, yes, each node operator is an important position, but as a collective, they're relatively decentralized. And so that's how I see participants like the pool delegates evolving. But where we're at in terms of roadmap for decentralization at the moment, obviously early on, in order to move quickly, you have a kind of a greater degree of centralization. We've started to get like a really, really strongly engaged community. We're doing community calls probably bi-weekly now. So our next one will be coming up this Wednesday, actually, Eastern time. And so I think what we would want to do is, decisions like the choice of new pool delegates, we would, make available for the community to kind of do that whitelisting process. And, also use, we want to involve the community in early decisions like the next currencies to support participants like new pool delegates and try to establish integrations and partnerships early on. So, the way that we're doing that is trying to be communicating as actively as possible with the community and having governance voting within our Discord channels. So we recognize that there's kind of a limited holdership of the token at the moment, so it doesn't really make sense necessarily to have on-chain voting too early. Instead, what we can do is just poll members of our Discord, and so it's like one person, one vote at the moment.
That makes a lot of sense.
Certainly what we want to do is decentralize and turn over more significant decisions to the community. And it's just a matter of how quickly we can do that.
And will you have a system? So we've already used the term delegates for something else, but as a Maple holder who perhaps isn't involved in the day-to-day of Maple as they might be, is there going to be an ability for someone to kind of like stake their Maple vote to somebody else? Like, are you going to have kind of community power users or anything like that? Have you thought about anything like that, or is that still in itself up for grabs?
Well, I'd say it's up for grabs because nothing's been implemented. But how I think about it is that, like, I think I would like the ability to have votes delegated to power users. Like I'm really enamored with the concept of potential protocol politicians because I think that they can, become experts in protocols and then advocate quite strongly for other members of the community. And so just to touch on governance as well, what we have in place at the moment is a 4 of 6 multi-sig. That's presently, kind of a couple of members of the core team, plus some of the members of our, original investors from seed. What we would look to do, I think, is add or replace existing members with some people from the community, so that we can gradually increase the level of community participation in the direction of the protocol, and where we take that kind of together.
Brilliant. Yes, that's absolutely amazing. And you've had a pretty successful launch as well, I'd say, in terms of building community and starting to spot some of those early community potential power users. Can you touch a little bit on what's happened over the past couple of days and what the immediate priorities are?
Yeah, So I would say, we launched the token via a Balancer LBP. So I think that went pretty well. There are a lot of moving parts with it, but we managed to, like, the elements that I would say were very successful were it raised about 10.3 million and kind of really, really interestingly and importantly, we've ended up with, about 1,080 holders of the MPL token, which means we've got quite a wide degree of, quite a wide degree of participation. And that, that's exciting for me because it means we've got, potentially a broad community of people to engage with. And what I'd say has been really pleasing is that we haven't actually seen too much of the kind of when moon sort of talk in the Discord. Most people have had like really, really sort of positive and positive discussion and sophisticated discussion in the Discord, and more been focused on where we want to take the product and where we can take it together. So the other thing is that with the obviously with the Balancer LBP, it starts at a high price, and then the goal is to kind of keep dropping the price until it finds a kind of support level that I guess DeFi sort of values the protocol at. And what was really interesting with ours is that we saw that initial price decline, and then it kind of found a sort of steady support level between $20 and $24, which is a 200 to 240 million sort of FTV, and then traded relatively consistently there. And then since then has sort of it dropped below, but it sort of held back to that level. So I think that's been kind of interesting. It was impressive in how uneventful that was.
No, definitely, and I think the longer time horizon as well. I've seen lots of different launches, and I think yours did exactly what it was meant to, which is give the protocol the correct value, or what DeFi values the protocol at over the course of the 3-day auction, allowing everyone to get in at their at a price that is relatively fair, and it went on to trade at that level afterwards as well. And at the same time, you got 1,000 holders, and you've got a lot of very smart people in the Discord. And I think maybe perhaps not me, so other people.
Other people, but I do love our Discord. I would be remiss if I didn't call out that they recently, I believe we have a winner among the naming, which is, I think the community will be called the Mapes, which is short for Maple Apes, which I'm super happy about.
The Mapes. Brilliant. Well, we can have a governance vote to change that later on, don't worry. It's brilliant, because I think maybe the nature of the protocol and the problem that you're solving perhaps attracts a slightly different crowd, because it hasn't been done before. It's a very interesting concept. There's lots of unknowns, and it's very interesting. So I think, you're targeting the right people, and the people, from what I've seen in the Discord as well, you've managed to avoid a lot of the annoyingness that comes with token launches at the moment. And I think you've set the scene really well. And what's the roadmap looking like for the next weeks, months? What's the immediate priority, and when do we get to see the first pools live, etc.?
Yeah, well, I think one of the things that's come up has just been liquidity around the balancer pool. So that's kind of an immediate fire to put out is whether we introduce a new Uniswap pool later this week. But what I'm super focused on, and the team is super focused on, is getting the product out for launch. And so that's going to be in the second half of this month. We'll come out with firmer dates. But what that is going to look like is that will be the deployment on mainnet of the protocol. It'll be that first pool of 15 million in borrowers, and then we'll be seeding that with some institutional liquidity, and then we'll be opening it up to broader liquidity mining. And the way that will work, for the avoidance of doubt, is that people can deposit USDC. The USDC supports loans to these first borrowers, who are going to be market makers and market neutral funds. And then 4 weeks after that, we will be at kind of coinciding with the first repayment. That's when we would add another 15 million of borrowers, and when we would also look to add the second pool with the pool delegate that we will be able to announce that partnership with soon. And so then you're looking at say 60 days, we then have north of 45 million TVL, and then we progressively keep expanding that because. As I mentioned, we capped the first borrowers at 2 million, but obviously these are extremely creditworthy names. So we want to build up that relationship and increase the loan sizes to those borrowers and increase the tenor.
Amazing. So a guided launch first of all with the first pool. 4 weeks later,
sorry, I have to add. So it would be about within 1 to 2 months. So say 4 to 6 weeks. 4 to 6 weeks or 4 to 8 weeks. We would be introducing staking, which will be the 2 ways you can participate after launch are just depositing USDC to be lent out in the pools. That is one way to participate in liquidity mining or yield farming of the MPL token. Then the other way will be to stake the MPL token and USDC, and you'll also be able to earn MPL rewards when that's available.
Amazing, brilliant, and I'm super excited, and very, very excited for the first pool and to hear the delegates, and just the fact that you've got so much borrower potential in the pipeline as well is pretty awesome to hear. I've got to ask, I guess, a question, very targeted at DeversiFi and, what we're building. What are your thoughts on Ethereum congestion and network fees at the moment? Do you think that might potentially be a friction point for Maple protocol participation? Have you thought much about that? And, where have you landed on that at the moment, or where are you at with that?
Yeah, those are good questions. And I'll answer these, and then I will come, because I can see we've got Maine has asked a couple of questions as well. So I'll answer these, and then I'll address those. So yeah, I think layer 2 solutions and layer 2 solutions are important, and where we're at early on in the protocol, like from the borrower side, it's probably less important. So we need to think about which constituents it's most important for, and it's going to be the people who are depositing liquidity, particularly in smaller amounts. So we want to ensure that that's kind of economical for people, and it's not, it's not eroded by gas fees. How we're thinking about it is that we, once we launch, we'll then begin exploring L2 solutions. I've had a couple of initial conversations with Starkware, for example, which is obviously working with DeversiFi, and then also with Polygon as well. So I'd say we're open to different solutions here. We haven't committed one way or another, but it is important for us.
Yeah.
I think we're definitely aligned on that.
Yes, I think it's something you have to think about, right? Because no one knows which way Ethereum's going to go in terms of fees, but
yeah,
we probably know it's going to go up.
Yeah, I mean, we know it's going to go up. I mean, the more recent increase in block sizes kind of help things, but for the borrowers, it doesn't really impact them. If you've got a $2 million loan and you're making extremely large sort of interest payments periodically, you're probably less concerned about $100 or $150 gas fee. But for people who want to participate as LPs and deposit and then claim rewards, those fees can add up.
Definitely. So I think it's really interesting that you've said you're exploring lots of different options, because that's something that we found at DeversiFi. When we started out a year ago, we thought that everyone was going to congregate on kind of one layer 2 solution, but actually we're seeing a very kind of fragmented space open up, where lots of different scaling solutions are suitable for all different people. So if you really care about decentralization and you're a purist, then you go for a ZK rollup. If you're more concerned about usability potentially right now, and the decentralization is not particularly a thing, or you're happy with sidechains, then Matic Polygon is a great option. And then you've got things like Optimism and Arbitrum coming up. So there's it might be that actually protocols end up having their main base on Ethereum layer 1, like yourselves, and then having lots of different kind of, almost like different products or different front ends to their protocol on these different scaling solutions. So yeah, very, very excited. And something that we.
Sorry, you go, Russ.
No, I was only about to say we launched a couple of days ago the ability for users of DeversiFi to stake into Compound directly from DeversiFi. So it's this concept called DeFi pooling. So we essentially have a float of Compound CUSDT tokens, and we allow anyone to participate in Compound by taking those off us on DeversiFi, and then we just replenish. So potentially we could do something with a couple of Maple pools. We could have a really risky Maple pool and a really not risky Maple pool on DeversiFi on our yield section, and allow people to do it that way. There's tons of different angles, and I think it's really exciting. I'm so excited for the launch and all the ways that it's going to go. But I think we've got a couple of questions on the side here as well.
I think so. Maine's got a couple of good ones, particularly from the DAO side of things. If somebody did have all of their financials on chain, then I kind of query whether it would be more efficient, because if the alternative to going with a pool delegate is actually that you're going with kind of a distributed community of people who may not actually have expertise, then are you just kind of asking for a vote on your financials? And does that vote still take 5 days or 7 days? So perhaps it's actually not more efficient than going with a pool delegate. You don't necessarily need confidentiality, but you might still want expertise and feedback on the loan terms, because I can still imagine that a DAO, is going to have to consider a continuum, which is, do they want to provide collateralization? Do they want to shorten the tenor in order to borrow a larger amount? Are they willing to pay more in order to be able to borrow a larger amount? These are all things that would be like subject of a fruitful discussion with a pool delegate. So my answer is I still think there's a large degree of efficiency to be gained there. Is there any IL for staking USDC and MPL? There is. And that's part of the reason that we'll be also having kind of rewards for that. So one thing that we would explore is whether we say shift the balance of USDC to MPL to be, instead of 50-50, perhaps down the track it could be 80-20, so that you reduce exposure to IL, but it's definitely there to begin with, for sure.
Do you ever see the possibility of a DAO being a lender or even a delegate? Do you think there could be a potential for some sort of super DAOs with a collection of like-minded people who are actually looking to diversify their treasury, and they either lend into Maple or they become a delegate and earn fees that way?
Yeah, I definitely do is the answer. So I would say, we sourced sort of 45 million in commitments to provide liquidity, that we can use to cornerstone the early growth of the protocol. But when we do our second kind of liquidity round like that, and launch that program, we're definitely targeting DAOs for it. And so we've already had conversations with a number of sort of protocol treasuries. And so we'd definitely be open to DAOs who want to contribute liquidity there, because I see it as part of part of prudent treasury management is that you might have some allocation that you put into like a compound or Aave money market, some allocation that you put into a bit of a higher yielding product, like Maple, and then maybe you have some allocation you put into a more risky product on another protocol or platform. So definitely is the answer. And then also as a pool delegate, you could see that, DAOs are a collection of people with expertise, right? So you could definitely see that a DAO could have expertise in sort of credit and fixed income. So they could totally be, a pool delegate.
It's so interesting the way that this could go. I definitely see the potential for DAOs on the lending side for sure, because a lot of DAOs were holding Ethereum or are earning fees from other protocols and are looking for active ways to diversify. I can't remember the name of the project. YAM, I think, was a big one that obviously has a very active managed corporate treasury now, essentially, and there's lots of other ones. So I definitely think this is going to become a bigger thing over the next couple of years. And the ability for them to diversify, earn yield, and then maybe on the flip side, people who are setting up specialist DAOs to govern protocols, it could be really, really interesting. So I think you've hit in this at the right time, and there's lots of different ways this could go, which is really, really exciting. I think that's pretty much everything I've got covered. Is there anything else you wanted to cover, or anything that you wanted to mention?
No, I think, look, from here, just really pleased, hope anyone who watches this and finds this interesting, if you'd like to join our Discord or join our Telegram group, we try and be, as responsive as possible there. We're going to have our next community call Wednesday Eastern time this week. I think it's 3:30 Eastern time. But we'll have that in the Discord. And so I would encourage anyone who wants to come along, hear about kind of the roadmap for the next few weeks, and who wants to meet us and then, potentially participate in the community. We also have the Pancake panel does kind of more focused discussion, and that's an opportunity for people who perhaps want to get involved in, future working groups to engage with us. When poker tournament, we were having those pretty regularly. I think we'll definitely have to get one set up for probably Sunday UTC again. So I think stay tuned, Maine. I'll try and make that happen again.
Sydney, it's been a really fantastic. Thank you for taking the time, and I reckon we should have another catch up in 3 or 6 months when everything's launched, when the protocol's controlling about 4 billion in liquidity, and things are looking pretty cheap.
No, definitely. Appreciate you setting this up and being willing to chat, Ross. And for as I said, for anyone who wants to get involved, follow us on Twitter, join our Discord, come along to the community call, and appreciate everyone who tuned in for this or who watches it afterwards. Thankful for your support.
And just from me as well, congratulations on the launch, and good luck for the upcoming protocol launch in the next couple of months.
Yes. Thank you very much. All right. Thanks,
Thank you,
Ross.
Sydney.
And
Take
thanks,
care.
everybody who listened. See you guys. Bye.